Thanks for staying with us. Let's take a quick look at your market news now. Shares in Hong Kong dropped sharply, wiping out the Hang Seng's index gains for 2021 once again, as Chinese tech and education stocks plunged on regulatory pressure. Meanwhile, the summit between China and the United States got off to an acrimonious start, weighing on investor sentiment. The Hang Seng index fell 4.13%, leading losses in the region. Mainland Chinese stocks also saw sizable declines. European stocks pulled back, tracking lackluster global sentiment as investors monitored corporate earnings. Stateside, US stock futures fell in early pre-market trade ahead of a huge week of big tech earnings. Investors are also looking ahead to the Federal Open Market Committee meeting later this week for hints as to when the central bank may begin tapering its stimulus program. Let's take a look at what's happening on the markets. I'm joined by Gary Booysen. He's a portfolio manager at Rand Swiss now. We'll take a look at the markets first and then go to you, Gary. Gary Booysen, a very good afternoon to you. Thanks so much for your time on SABC News today. What's your take on the JSE's performance at this point?
Thanks for having me on the show. It's a very mixed performance at the moment. So we've obviously got the industrial index down almost 3%, down over 2.7% on the back of the clampdowns that we're seeing in China. So this has sent mass and process down heavily. They're down over around 7%. On the other hand, you've got a very buoyant resource markets there. So that's up around 2.6%. And this is coming on the back of solid results from Anglo-American Platinum. And that seems to be helping the sentiment across the sector. So you're seeing the likes of Sabania up more than 2.5%. We're also seeing a little bit of a rally in the likes of BHP. And then on the downside, we've also got a little bit of company news around Tiger Brands, which is dragging that stock down after some of it's going to face about R500 million worth of stock write-offs after defective seal around its cans and a subsequent product recall. So came into the market with Asia down, our market down overall, but certainly the resource sector helping just to keep us afloat.
All right, Gary, last night President Cyril Ramaphosa spoke about this new relief package to help businesses and individuals recover from deadly riots and the lockdown. Can we as a country afford these measures, and what are options for funding this?
Yeah, so it's difficult because clearly the businesses and people, especially in KwaZulu-Natal, are under an enormous amount of pressure. So you can see why the government wants to step in and assist and to keep things flowing. On the one hand, the listed companies are going to probably do a little bit better just because they've got slightly deeper pockets and access to capital markets. But it's really the small and medium businesses and really the people that are going to lose jobs that are the most effective. And that's really where they're trying to target the relief measures. So on the one hand, they are looking at doing once-off payments. We're looking at getting I think it's a 350,000 rand, at least 350 rand. Grant through, and that should affect up to almost 10 million people. But in terms of funding this, there's only so many ways you can fund it, and that's one through obviously the tax revenues that they're generating at the moment. That, of course, is a problem because you have a shrinking tax base. But they're also looking at more innovative ways of funding it as well. So they're looking at potentially seeing some sort of tax rebate as well, via the ETI program, and that essentially is allowing some relief to be flowed through from funds that have yet to be collected. So we're borrowing from our future. we're using the shrinking tax base that we already have, and of course there's also the option to go and finance it through I suppose government bond issues as well. But at the moment it's difficult to see where this cash is going to come from. It hasn't yet been announced as to how they're going to do it. The actual mechanism of the payments hasn't been announced either. So it's a difficult situation, no question.
All right, Gary, today we're seeing financials from the likes of Amplats and Liberty 2 Degrees. Which of these did you have a chance to look at, and what are you seeing?
So I've looked at both of them. So if you have a look at Amplat's, as I said, very, very solid numbers. And this is really on the stronger commodity prices that we've seen. If you look at the PGM basket, that's up around 47% in dollars over the last year. And that's just dropping straight to Anglo American Platinum's bottom line. So the stock's up about 7.3% at the moment. They've also announced a special dividend, so we're going to see, it's a record payout of 46.4 billion rand paid back to shareholders. On top of this, it's also very, very positively been a fatality-free 6 months, because these are obviously interim results. And at the same time, just from an operational point of view, we're seeing more metal coming through from the smelters and refineries as well. And this is obviously, as a private enterprise, they were using the downtime to obviously refurbish some of their operations, and that's clearly paying off for the company as well. But the majority of this is based on higher PGM metals prices. Liberty 2 Degrees, obviously a very different business, also increasing their payout there. So Liberty 2 Degrees owns shopping centres like Sand City, Eastgate, Melrose Arch. And it's saying that the foot traffic in its retail centres are getting a little bit better. So a little bit of good news there for shareholders. Occupancies have risen to 96.7%, which is just exceptional. Obviously, their office property, they hold about 17 properties total. Office makes up 3 of those properties, still under a lot of pressure. But it's nice to see that at least from a retail point of view, things are turning around a little bit.
Gary, we're running out of time, so I just wanted you to give us a look at the week ahead. What are you looking out for?
So it's going to be a busy week. So we're in the middle of offshore earnings season. So that's the US earnings season. So this week, tomorrow, we've got Apple reporting results at least. That's we're expecting, the Q3 numbers to show revenue up around 26%. But, it's going to be interesting to see how they're impacted by the chip shortage. We have a Fed meeting on Wednesday. And potentially on Thursday, we actually have the Robinhood IPO, which is certainly going to be interesting. So that's obviously the US discount broker that started offering trading and kind of rose to fame for offering free brokerage. In the week, we've also got the likes of Amazon, Facebook, and Google all reporting. So it's really going to be the big tech-heavy companies that are going to come out with numbers, and that's going to be what we're looking at.
Gary Booysen from Rand Swiss, thanks so much for your time on SABC News this afternoon.